Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We'll stay on the technology theme here. We're going to check in with Mandeep Singh, Global Tech Research Head at Bloomberg Intelligence. Mandeep, lots of news to talk about. I want to just start with CrowdStrike. Sales outlook kind of in line with expectations. Stock off a little bit here. Just refresh our memory. What is CrowdStrike and how does it fit into the tech stack?
Yeah, I mean, they are one of the pure play cybersecurity names, and clearly they have done quite well in terms of their top line growth over the last 2-3 years. And you know, like with everything in the SaaS complex, some of these names have come under pressure because of potential competition from LLM companies like Anthropic. And I think that's where you see a muted reaction today. But, you know, they had their best new ARR growth yesterday. And the guidance was a little conservative, but that's what we are seeing from all the software companies that have reported results this quarter is they want to beat and raise for the next one. And I think for a company like CrowdStrike that's growing mid 20% and very high retention rate. I mean, things are looking good because all these LLMs should potentially drive more demand for cybersecurity. If there's one area that certainly is poised to benefit from LLM usage, it should be cybersecurity.
Mandeep, CrowdStrike has been, as you mentioned, one of the biggest beneficiaries of cybersecurity spending boom. After this earnings report, does it still look like there is still strong secular demand, or are we starting to see signs that those budgets are becoming a little bit more selective?
Not in the cybersecurity complex. So if anything, you know, if you have more data now, which is the case with LLMs now, you know, you are generating a lot more data, you are using it for training. And so all that needs to be secured, and prompt injection attacks is a new type of attack that you have to secure against. So from my perspective, you know, and based on our conversations, like this is the last thing any enterprise would want to cut. Yes, they are shifting budgets, you know, allocating to AI more compared to the traditional areas. But when it comes to cybersecurity, I mean, the risks continue to get bigger and bigger in terms of data loss or, you know, getting hacked. And so from that perspective, you're unlikely to cut back on, you know, especially a primary cybersecurity product, which, I mean, in a lot of cases, there are point products, but CrowdStrike is more of a platform with multiple sort of threat vectors that they protect against. So from that perspective, also, they are quite insulated.
All right, folks, this is how it works at Bloomberg. Usually, Mandeep, he comes into our studio when we want to talk to him. He's not in our studio today, which got me thinking, where is Mandeep Singh today? And at Bloomberg, we can tell where everybody is at all times. You have to put where you are and who you're meeting with. It's kind of the full disclosure thing they do at Bloomberg. So I know where he is. He's downtown at the Bloomberg Invest Conference. Anytime Bloomberg gets its clients together, they all just want to talk to Mandeep. They want to hear Mandeep talk about what's going on in tech, and most notably AI. So I'm going to go right there. Mandeep, what's the conversation today about AI? It went from just build. Now people are starting to think about what are some of the ripple effects, second and third quarter effects here. What's the investor view of AI these days?
Yeah, I mean, at this conference over the last couple of days, the focus has been on the private markets. And as you know, private equity owns a lot of these traditional software companies that generate very high free cash flow. But everyone is looking at, you know, what are these LLMs going to disrupt, and what does that mean, you know, to the free cash flow of some of these companies? And so private markets have been a big focus, I would say, over the last 2 days.
Mandeep, there's been this trade, the Halo trade, focusing on tangible assets when it comes to deciphering, who the AI winners and losers are going to be. I spoke recently to UBS, a global wealth CIO, and she said that she's focusing on the builders and not the coders. How are you thinking about this dynamic between the companies with tangible assets versus intellectual property?
Yeah, I mean, look at all the hyperscalers, right? Most of them used to have an asset-light business model. Now we are talking about, $700 billion in aggregate capex for this year just from the hyperscalers. And this is likely a multi-year cycle. So from that perspective, I mean, we know AI is compute intensive and you need a lot more, infrastructure to do AI. And so from that perspective, things certainly are shifting, from intellectual property to owning infrastructure. And that's the trend that is likely to continue.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
AI story, just yet another angle, is how AI is being deployed by the Department of Defense and other parts of the U.S. government, but particularly about the Defense Department. We had Anthropic clashing with the Pentagon about how their AI could be used. Then we had OpenAI Chief Executive Officer Sam Altman says, we'll come in and we'll do some of the work for you. And there's a lot of uncertainty about how AI is going to be used and who will actually provide it for various government entities, including most notably the Department of Defense. Vlad Rikhter joins us here. He's the CEO of the cybersecurity company Fencer. Vlad, how do you think this is playing out? AI, the Department of Defense specifically, we've had some uncertainty here. What do you make of it?
Yeah, look, I think there's clearly some sort of misunderstanding internally between the departments, the Pentagon and Anthropic, seemingly because from what we're reading over the weekend, OpenAI signed an agreement, according to Sam Altman, with the Pentagon that kind of stated the outlines that I think we as citizens would very much care about, which is we don't want to see mass surveillance, and we definitely can't even imagine a situation where there would be autonomous weapons going through there. But I think this also speaks to part of the challenge within these AI companies, and specifically the models, is that a lot of the data that they're trained on is effectively the same, and so over time, the work that they're doing becomes kind of commoditized, and there isn't much of a moat. And so the government will inevitably, in my opinion, turn around and start to work with the vendors that will play ball with them and not try to strong arm them in any single position.
Opportunistic and sloppy was the language that Sam Altman used. Pretty strong language there. What does that tell us about the rush by AI labs to secure government contracts, and how important of a customer is the Pentagon when it comes to the AI industry?
Yeah, great question. So I think from a perspective of how important the Pentagon is, or the government specifically, to these AI companies as a customer, it's actually not that much. I mean, if you look at it from the perspective of Anthropic, it was reported that the deal with the Pentagon was around $200 million a year. And I think as reported by Bloomberg today, Anthropic went from $14 billion in run rate a few weeks ago to nearly $19 billion today. It's 1% of their revenue, right? And I think for the same, probably similar to OpenAI and some of these other ones, that it's meaningful revenue, but as a percentage of the overall base, it's not significant. And instead, what you end up, we need as citizens is that the government actually chooses, and it's more important for them. I think in the case of OpenAI with the contract they just signed, it was a little bit too fast, like Sam said, and the communication was not great. I mean, there was a handful of departures, including some relatively senior people from OpenAI after the weekend that decided to go to Anthropic. And I'm not sure how much people know about this historically, but the Anthropic founding team was actually for the most part, all ex-OpenAI employees that disagreed back in 2021 with some of the direction that OpenAI was heading to, and decided to leave and start Anthropic themselves. And I think today there are roughly 70 to 80 employees at Anthropic that are ex-OpenAI, but at OpenAI, I think there are only about 10 or 12 employees that are ex-Anthropic. So you can see kind of where the movement's been going between the sort of the intelligent folks there.
Do we have any idea to what extent in the Pentagon and the Department of Defense that AI is being utilized? Are they cutting edge? because they have the resources, or are they kind of an old government, plotting institution? How are they employing AI?
There was a great article, and I think it was actually from you guys earlier this morning, that popped out that kind of described a little bit of that was revealed by some source of how it's being used. And in the understanding of what was reported was that the Pentagon had decided that there were going to be roughly 1,000 places that they were going to hit initially, 1,000 sites that they were going to hit initially inside of Iran. That in previous versions of this, you can't hit all 1,000 at once, and so people would sit down, they would prioritize them based on a handful of different factors, and it would probably take a couple weeks to get this done, if not longer, right? In this case, what was understood was that they were using Palantir's Maven product, which underneath the hood was also being powered by Claude from Anthropic, and they basically fed in a bunch of data that Palantir has access to from the government, and said, okay, prioritize this for us based on what we need to do in the different sort of movements, right? Step 1, step 2, step 3, whatever it may be. I think at that point, just like if any of us were using AI to prioritize some other thing for us, it pulled out a spreadsheet and said, listen, this is, I'm paraphrasing here, assuming, this is what you should be doing. And I imagine the powers that be sat down, took a look at it and said, is this really what we want to be doing? Do we want to hit these first 100 or not? But at a minimum, you're getting that done in 45 minutes, right? This is not a multi-week endeavor. It just kind of gets you a little bit faster there. It might only be 90% correct, but humans will decide the rest of it from there.
Vlad, we've seen AI leaders call for stricter regulation while simultaneously pursuing defense contracts. Is there a sense that these deals are happening faster than the industry can establish the right ethical guardrails?
Yeah, so depends on the day. You sometimes can go back and forth. What I think, what I would tell you is that it's not even sometimes so much as the guardrails from the industry, but the guardrails from the government, right? There are some significant points that I agree very much with Dario, the CEO at Dario Amodei at Anthropic on this, which is the government does need to provide some guardrails for us on what is appropriate, what is not appropriate. How do we protect U.S. citizens? At what point in time does the Pentagon decide to overstep some of these boundaries, and if they're allowed to? But I think these things are moving too quickly at this point, right? I mean, these models come out a new version of a model comes out every few months from one of these organizations, and it beats the previous one by 10, 15, 20, 30%. And all of a sudden it unlocks things that we didn't think was possible. And you hear these comments that I think Dario said this earlier this week, where he said that he believes that there's going to be exponential growth later this year. And for a company like ours, we went from 5% of our code being written by AI a year ago to north of 60% today. Wow. You start to struggle to imagine what exponential looks like by the end of the year. And so I think it's just tough to keep up with these things.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
Paramount Skydance acquisition of Warner Brothers Discovery will trigger a media re-ranking and strategic sector reset, our guest says. We expect the industry to consolidate around three dominant players: Disney, Paramount, Netflix, leaving Comcast subscale and making further M&A likely. Geetha Ranganathan, she is the media analyst for Bloomberg Intelligence. Brian Robertson and the gang down there in Philadelphia, probably not going to be happy to read this, Geetha. What do you think Comcast will do in this new world of Paramount and Warner Brothers?
They absolutely need to do something, Paul. I mean, that has been the whole thinking. We know that they are ready to do something because last year when we had this whole Warner Brothers Discovery auction kicked off, we know that Comcast had actually kicked the tires there. They had proposed a merger of NBC Universal, which is their media division, along with Warner Brothers Discovery. But of course, because it was a major restock deal as opposed to a cash deal, it was, obviously the Warner Brothers Discovery team didn't go ahead with it. So they know that something needs to be done. But at the same time, I think Brian Roberts and the team have been somewhat shy to spin out NBC. But I think it's some kind of strategic action is absolutely imperative at this point, Paul.
Geetha, Paul and I were just talking about the language in your note, a media re-ranking and a strategic sector reset that's going to rattle a lot of folks at Comcast. Can you talk to us a little bit more about what exactly that means?
Yeah, Alex, absolutely. So if, in fact, the Warner Brothers Netflix transaction had gone through, that would have left Paramount without a dance partner, so to speak, right? And they were already considered a subscale player. They would have absolutely needed another kind of deal. And majority of the thinking was that yes, they might then approach Comcast and look to kind of bolster up their whole media presence. Now with the Paramount and Warner Brothers deal going through, you have, obviously the media re-ranking. You have what we call the big three. So you have Disney there with almost 100 billion in revenue. Paramount and Warner Brothers Discovery will bring in about 70 billion, and then you have Netflix with about 50 to 55 billion. That really leaves now Comcast as somewhat of a subscale player. So this is the whole thinking. They need to do something. They need to do it quickly. It's somewhat of a unique play, Comcast, because they have both distribution and content assets. So they are the biggest broadband provider right now in the United States with over 30 million households. The problem for them is their broadband business has been under a lot of pressure. So that has kind of taken the spotlight now to the media assets. And media assets actually, for them, fortunately, there's a lot of focus, and it's a lot of positive focus, because we know that Netflix was willing to pay a 25 times multiple for the Warner Brothers studio. So you just kind of apply that multiple to the Universal studio, and they have had so many hits, whether you're thinking about the Minions or Oppenheimer or Jurassic Park, Jurassic World. That's a studio that delivers consistently. So you just slap that multiple onto the NBC studio. That should be worth at least 30 billion. And then they have the theme parks, and the theme parks are really growing at a nice pace for them. We did some analysis. We said that the theme parks for NBC should be worth at least 40 billion. So you have an asset here which is really kind of undervalued under the Comcast umbrella. So they need to do something, and they need to do it quickly.
Geetha, I've always thought two of the key advantages for Comcast are, one, their management team. I've been a big fan of Brian Roberts and his management team for a long time. And the second thing is their balance sheet. They've got a very strong balance sheet. But there's not a lot out there for them to buy. What do you think they should do?
I think the first thing that they should do, Paul, is spin out NBC. So okay. NBC under the whole Comcast, family thing is just not working out. I think the ultimate route will be for them to spin out NBC, maybe, kind of become this roll-up vehicle. Maybe they combine with some other assets, some of the smaller players out there. Could be an AMC Networks, could be a Lionsgate. Of course, nothing is necessarily going to be transformative, but, at least, maybe once they're spun out, maybe they become an interesting target for Netflix. I mean, who knows? Netflix has already kind of gone this whole M&A route. Maybe Comcast becomes interesting to them.
I see Fox out there, and I would call them a subscale player too, but boy, they're doing fine. It seems like they're broadcast and their whole audience, they've got that editorial thing down. They know who their audience is. What do you think they do?
Yeah, so the end game for them is also a little bit unclear, Paul. I mean, up until now, I think Fox has made all of the right decisions, whether it has been to get rid of some of the, challenged cable TV networks, the studio with the whole Disney deal in 2017, and really kind of double down on live sports and news. Yep. The thing is, the one big thing that we're all kind of looking at this year is going to be the NFL renegotiations. And that's going to have some serious implications for all of these companies, whether it's Comcast with, NBC exposure and Fox. Fox is the most heavily exposed to NFL programming, and they're going to have to pay up. And so, at that point, I think there is going to be some kind of reckoning for all of these media companies.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
It's the time of the earnings cycle, the end of the earnings cycle, where we get to hear from a lot of these retailers. Today's no different. Bath & Body Works reporting some numbers here, so let's break it down. Lindsay Dutch, Consumer Hardlines Senior Analyst for Bloomberg Intelligence, joins us here. So Bath & Body Works, I know they're doing it. They're in the midst of a turnaround here. Lindsay, what did you learn on the earnings release?
Hi, Paul. Thanks for having me. Yes, Bath & Body Works is aggressively pursuing a turnaround strategy. The fourth quarter, we saw sales and earnings come in better than expected, but still down year over year. And then their outlook for 26 wasn't super surprising, kind of in line with what they were expecting 3 months ago. Growth is kind of off the table as they pursue a strategy that's going to attract younger customers, a broader customer base. They're moving a little bit into wholesale. They're pulling on lots of different levers to really become back to the brand that they have been historically.
Lindsay, promotions are a big part of Bath & Body Works' strategy. Are they driving traffic successfully, or are they a sign that demand is a little bit more shaky?
Yeah, great question. So promotions are a huge part of Bath & Body's historical strategy. The new management team is really trying to ultimately move away from that. I don't think 26 we will see a significant shift. They said on the call they're expecting promos to be about flat this year. They do still see success from those promotional strategies. At Black Friday, Cyber Monday, they elevated the strategy versus historical, and that deeper discount definitely drew traffic, and I think that was a key part of the little bit better results in the fourth quarter than they were expecting.
Lindsay, what's the Amazon.com play here for Bath & Body Works?
Yeah, so I think that they're really looking to broaden their brand awareness with consumers that don't shop them already. So they have, 40 million loyalty members. Some of those customers have been with Bath & Body Works for a very long time. They're extremely loyal to the product, the scents that they have. But this company is really looking to reach that younger shopper. They're pushing into new lines. They have lip products now. And the move on Amazon is similarly broaden brand awareness, reach other shoppers that they don't currently reach. So I don't see a huge push into wholesale as a new business strategy, but it's really getting that brand in front of customers that aren't going to the mall and seeing their store.
This is a company, Lindsay, that falls into the affordable luxury category. What do these results tell us about the broader consumer and trading down to companies like this?
Yes, so Bath & Body Works has historically drawn customers for their value proposition, and they have an everyday luxuries line that did very, very well in 24 and 25. They still want to maintain their piece in that seeking for value behavior, and I think that's very important for them going forward. The new management team also wants to elevate the brand and push it maybe towards that prestige level a little bit. And in beauty broadly, we've seen prestige holding up a little bit better than mass. So it's an interesting move to try to sort of elevate and move up a tier, when a lot of consumers are seeking value. But I sort of understand the logic behind that, just taking a step back where those prestige brands have held up better in this economy, probably driven by a higher end consumer.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.